Good evening. Formally, let me welcome Tankar to this conversation. We're very delighted to have you as an expert and someone who is associated with the largest stock exchange in the country. The first thing that I would like to just touch upon is a quick recap as to how we have seen the MSME index fare and how did it correlate with the facts on the ground. The first thing is that as of November, when we took stock of the Jakarta Sumpoorn index, it was somewhat of a low point at 0.53, and the highest that it had touched during the year was 0.62. And there were several reasons. One of that, of course, have been the intermediate impact of the tariffs that the Trump government had suddenly brought in. And that had a very difficult impact on the MSMEs, especially because they have been supplying to a lot of OEMs, and some of the industries that were very US export dependent have had difficult times. One thing that we took away was the resilience of the MSMEs because they have demonstrated reasonable recovery, evidenced partly by some of the numbers that we have seen, including the fact that GST collections, albeit was a little low, even in November at 170,000 crores, which was just a 0.7% up. But yet we are seeing demand green shoots already happening, especially led by auto ancillaries, the auto sector itself purely, which has driven the impact of all this. Textiles is starting to once again find its feet. I wouldn't say that so much for gem and jewelry. Yes, there has been some positive improvement. Exports on a cumulative basis has kind of held its ground, and there haven't been great numbers yet because April to November showed $292 billion vis-a-vis $284 billion for the same comparable periods. So the challenges have been there, but the resilience is also well demonstrated. We also saw that credit to MSMEs has been on a fairly good wicket. I mean, that the MSMEs are always having a very, what you can call as a felt need for working capital is not to be ignored. So they're not fully happy, as one could put it. And likewise, the payment delays, which they are facing from their buyers, has been a talking point, including a recent report that has been released as of last month, which does speak of a potential 6-point recommendation for helping MSMEs find greater access to credit, especially the 0.5 and 0.6 was very, very important for us to say that MSMEs should be allowed to have access to better credit and established through the mechanism of analysis of their GST behavior as well as the UPI payments, etc. And these definitely have been very, very important, and including possibly a change in the definition of the SMA1, SMA2, and NPA criteria insofar as it concerns MSMEs. So this would by and large cover some of the aspects that we have seen. We are definitely feeling that the best is yet to come and things should find much more traction as far as demand side is concerned, is our belief. And now I would like to hear from you on some of the very key aspects. I would like to start off by asking you certain very specific questions. More so because access to capital has always been a challenge for MSMEs.
Yep.
And when we look at the behavior of MSMEs which raise money more from the capital markets, we've noticed that the number has not been very, very large. I mean, it's about, I have numbers which say that in the period between 2012 to 2025, about 700 companies, 690 companies raised money of the order of 10,000 crores.
Yep.
And their market cap put together is about 1 lakh crores. according to you, what is the situation or the ecosystem that would allow MSMEs to have greater access to the capital market and to raise money? And I would like you to kind of touch upon various aspects that have now come into play, including the SEBI regulations, etc. So, what are these enablers, and how do you see capital being raised by MSMEs?
First of all, thank you very much again for inviting me on this call. I'm not an expert on MSMEs, but this is something that is very close to our heart because we understand how important MSMEs are to the Indian economy. They contribute to a significant portion of our exports, a very significant portion of our GDP, and again, even more, important to the employment, frankly. 30% of GDP, 40 plus percent, 45% of our exports, and nearly half of our workforce today are from MSMEs. So, Mr. Narasimhan, the importance of MSMEs cannot be simply, it just cannot be overstated. I just wanted to also point out something to you in terms of raising capital. Yes, the numbers are quite small in terms of where they could be, but the numbers that we see today, about 700 companies, you are right, have listed on the exchanges. But if I see the numbers again from where they were to where they are today, that bears some conversation as well. So, for instance, in FY13, FY12 is when NSE emerged started, and BSE also started around roughly the same time. The number of companies that raised capital in FY13 was 2. From 2 companies raising roughly 44 crores, we are today at by FY22 we had gone to almost 500 crores raised by 31 companies. FY23 doubled the number of companies to 60 from 30, and the capital also doubled from 500 to around 1300 crores. And FY23, the next year, from 60 companies raising 1200 or 1300 crores, the number again doubled. So 130 companies, and they raised almost 4,600 crores. So I'm just trying to give some perspective of where that 700 crore came in. 7,000 crore number came in. You're right. FY25, the last fiscal year, the numbers were around 160 companies, and 160 companies raised around 7,000 crores. But they are from things were less, things were even lower going forward. And this is equity capital. And this year, sir, the number of companies has, somehow peaked because of regulations that we can talk about later on in the conversation. But we still have had around 90 companies, 89 to be precise, until 19th of December. 89 companies have raised nearly 4,300 crores this year also in terms of and the market cap today is actually 2.2 lakh crores. So significantly increase in terms of market cap as well. And they are from all over the sort of country. In fact, last 2 years have been very, very good in terms of capital raising, sir. We've had almost 600 companies that have come to the markets in the last 2 years, of which about 480 are MSMEs. So the 700 number that you're saying, the last 2 years, last 3 years have been the majority of this.
It's a very hockey stick.
It's like a hockey stick. But you and me know that given the space that's there in India, the scope that is there in India, the number of companies that are there in this space, we can have listings like this. The hockey stick might go for a fairly long time. But what is important, again, is that at least at the top end of this hockey stick, the larger ones, because the Udyam portal gives you over many crore MSMEs. Not all of them can be listed, frankly. You need some scale before which companies can access the public markets, frankly. And but even there, the scope is significant, sir. We have had 700 odd companies so far. Numbers can easily go up to at least 30,000 if you look at even the medium enterprises. I'm just looking at how the government sort of classifies medium, small scale and micro enterprises. Micro, of course, they will be in crores. And if I remember right, the small scale number will be around 800,000, 8 lakh or so. But medium is at least 30 plus thousand. So it is not inconceivable to see that for a good many years going forward, you will have many more companies coming to the market.
When you said 30,000, um, my ears perked up straight away because it's a very large number and I would say fairly ambitious, though not an impossibility. I mean, uh, given the way it's scaling up, one thing is that I did notice there have been a lot of changes in the SEBI norms, which require certain minimum mandatory EBITDA numbers in 2 out
Yes.
of the 3 years. It also is prescribing certain lock-in percentages for the promoters. It's also prescribed the criteria for which, if it's working capital or general capital purposes, corporate purposes, there are some constraints which have been imposed. Do you think this is creating the right governance framework that is setting up the right ecosystem for more companies to comfortably come in? And also, do you see the investors being able to actually welcome these IPOs? See, while I totally agree with you, there is a huge number of prospective aspirants from an IPO market entry perspective. This would also require the other hand to clap, right? Which is the investor confidence, the market making, and to make sure that there is enough liquidity from the buyer's side or the investor, retail investors' perspective. How do you see this coming through if this magic number has to start becoming real?
That's absolutely a fair question. And you're right. In terms of making, getting a larger share of the 30,000 plus companies which are there, easy part would be to probably think that let's make regulations easy, let's make regulations more amenable so that allows more companies to come in. And that should also allow a lot more investor interest to come in as well. Makes sense. In fact, let's see this versus a main board and SME or an NSE emerge, even reporting requirements are half yearly versus quarterly on the main board, and a lot of perspectives listing requirements are far less onerous than a main board sort of platform will be there. Now what happens, sir, is that if you also have to look at a supply and demand of capital in this space, more companies imply that there is enough and more supply of equity which is available for this market. Investors will have a lot of choice in terms of good companies which are available. But at the same time, it is also important that when these companies come to the market, they are also those which provide comfort to investors. It's very important that given the scale of their operations, given the way that which they work, investors have on one side, when you have half yearly disclosures, the information that is available to investors is also commensurately much lower versus a main board yield. So balancing these two acts meant that on one side, you want more and more companies to list. On the other side, you also want to continue providing comfort to prospective investors. And to do that, I think what has happened is, one, you need okay from exchanges. That's one part. And second, you need companies that have certain good quality. And how do you sort of measure this quality? Some of them you've already mentioned in terms of the scale that is needed. You have to have an EBITDA of a crore and above and all. And you have to show operating profits in 2 of the last 3 years and so forth. And you have to have certain restrictions on end use. The idea here is that not to constrain promoters, but to provide comfort for investors who are investing in these companies for the first time. And so one of the things that, for instance, NSE has done is that in 2024, they put a new criterion saying that you should have positive free cash flow to equity in your company for its listing, had to show positive FCFE. Now, what has happened is, on one side, the number of companies that has come to the market has come down. It is not as if, that's only the first order condition. You think that the requirements are being onerous. But we've done some analysis. The performance of these companies after their listing has improved, has become better. So what happens is, from a listing perspective, there are listing day gains. How do you gain after listing? But what is more important is, do you sustain these gains? So what has happened is that over the years, the gains that are sustained has remained at a very, very respectable level, 50% plus. So there are many companies today which are not just lotteries, if I may, for investors to put IPOs in and then sell very soon, but to some place where they can list for a long period. The other thing is why list? The reason for listing is ideally for the investor's perspective. From the promoter's perspective, it's understood. But from an investor's perspective is you also get to know more of the company. The company's financials are, have passed under certain due diligence. And therefore, it also gives, more and more investors more comfort. One of the things that has happened in India, I would just take a minute on this, in the last 5 years, sir, is that household interest in the markets has increased significantly. Indian household interest. So, what do I mean by that? So, the number of investors in the stock market today is around 13 crores. And this number, even 4 years back, was slightly less than 3 crores. So, I remember I joined NSE in 2019. At that time, we had 2.7 or 2.9 crore investors. And, this was after 25 years of the exchange being there. And then, things just started rocking up, not looking up, just rocking up. We've added more than a crore investors in less than a year for the last few crores. So that's one side of Indian households taking interest in the markets. The other side, in addition to that, the amount of capital they are pumping into the markets is also significantly increased. So mutual funds today own roughly 11% of the market. Indian households own nearly 10% of the market. So if I look at people like me who are, Indian households, non-promoters, our ownership of the Indian market is roughly 18.7%. So roughly a fifth. And this market is the fourth largest market in the world. It's a $5.2 trillion, 470 lakh crore market. So there is significant capital that has come in to Indian markets, and it's important for people to have comfort in this data.
Do you see the promoters who have had a lock-in, especially the MSME promoters, of course, are always keen to have realize their gains a bit, in terms of having worked to build a business, etc. Do you see them reducing their equity? Because there is a different trend in the main market, right, where we are seeing that promoters are actually increasing their equity in very many companies. They've been gradually acquiring and increasing their stake. Do you see this any different when it comes to MSMEs, or you see them also using the exit options to dilute some of their stake and realize some personal gains?
Again, so that's a very fair question. And, if a promoter sees value in his or her company, then it makes sense for her to maintain the stake in the company and probably even increase it, given such value is available at reasonable prices. On the other hand, we've also had situations, not now where the market has been really meandering for the last 12, 13 months, but in a market which is doing very well, in a market where stocks have run up considerably, you do see promoter behavior skimming off the top, saying, we can take some money off the table, given that we may not get these valuations again. So the behavior of promoters in this case, in my understanding, depends on two factors. One, the company's own prospects, and second, general market environment. So, and I do not see difference, in these factors across main board and MSMEs. So, you can have a large company, no major difference.
You see that there is adequate liquidity that is also there. Has the market demonstrated greater liquidity? I'm not talking about market cap alone as a simple number, because that's also a function of the number of entities that are listed, etc., etc.
True.
However, on a daily trade basis, active movement in terms of the purchase and sale does create a better price discovery, and therefore encourages more companies to similarly aspire to get listed, etc. Because the entry criteria, as you said, is very fair. The EBITDA requirement and FCF, all of that, I think there are quite a large number of MSMEs who would qualify eminently to become, greater participants in the market as offerers of equity. So, are you seeing liquidity depth and width increasing to actually pull in MSMEs to seek capital from the market?
So fair point, sir. Again, there are two parts to my answer. On one side, would be to answer the question that if MSMEs do list, do they see a decent appetite amongst investors? And the second part is once they list, is there enough, turnover, average daily turnover where, people can come in and exchange their positions quickly, reasonably, costlessly. That's the part. So the first segment would be, I would say, fairly positive. Given the number of companies that have come to the market, in the last 2 to 3 years, and the numbers that I just pointed out earlier, 7,000 plus crores last year, 4,000 plus crores this year, and companies numbering in their hundreds, with IPOs going through. And in terms of the performance that companies have, I can share those details as well. There are the percentage of companies where you've had listing gains and you've had gains 6 months later has remained at around 40-50% at NSE at least. So for investors, there is an appetite for companies which are good on day one, on the day they list, but also good later on, making them candidates for long-term entry in their portfolio. That's the side. So there is considerable demand, wish, and appetite for SMEs to come in here. The second part of your question, where do you have enough liquidity for secondary market investors to quickly come in and go? I believe there is scope for improvement there. So what happens in any market is that larger companies have always a disproportionate share of the overall activity, simply because there's far more information available about those companies. So the Nifty 50 companies, for instance, have around 40+% of the market cap, but a reasonably slightly higher share of the turnover. And as you go smaller and smaller, the share of turnover frankly drops. So I would say there is considerable scope for improvement in the liquidity of these companies. And I believe that's also part of a maturing market. As the market develops more, it is possible for companies to trade more. It is possible to have first primary liquidity and then secondary market liquidity, and probably later tertiary liquidity in terms of indexes being put on these companies. So a classic example would be you have Nifty Junior, and then you have mid cap, small cap, and other indices. At some point, you also have micro cap indices, and SMEs come even later. So as liquidity goes higher, you will have products on those stocks, which will again lead to further sort of activity amongst them.
Have you seen that there is this trend of performing better than promised as an underpinning of many of the good, well-managed MSMEs that have been successful in raising money? And is that setting an example for potential entrance into the IPO market from an MSME perspective?
If I look at some of the numbers that we have, since Jan 24, NSE has got roughly 290 new companies, and BSE has got roughly 190 new companies. And of the 290, let me just look at NSE sort of data. Of the 290 companies that have come in, almost 233, a very good percent, 80% of them had listing day gains. But what is important is that for an investor who stays put in those companies, do listing gains continue into long-term gains? So there's been a significant number which has remained positive since those days as well, and that number is around 56%.
Sorry,
Yes.
I may want to just paraphrase my question. My question was more on the business performance.
Oh yeah, I was coming there. On the performance side, companies have done reasonably well. On the performance side, it is too early to make a very strong evidence-based answer, frankly. While companies have been there since the Emerge platform has been there since 10 plus years now, the numbers of companies that have come in, it's very, very recent. And we haven't analyzed promoter commentary around listing. That is, maybe at some point such an analysis could also be done to answer your specific question as to did claims actually become capital. We haven't done that. I believe it will be unique to look at such things. But I would say, what does the literature say? What does the global evidence sort of say? if I move beyond India to other markets in the world, say the German market, the US market, Taiwanese market, Korean market, what is typically seen is post listing performance tends to improve. The volatility in earnings tends to go down. We haven't had a strong study on corporate governance yet, but on business performance, the general, at least received wisdom is that performance does become better, more disciplined. The profit volatility comes down, and growth generally starts, going up. So companies avoid making unnecessary, expenses once because there's the big light on them. There's the big searchlight
Right.
on them. So I would not see Indian markets do any different. So you would have more companies when they come to list. I think from a policymaker's perspective, there is very clear recognition that growth, while large companies are benchmark companies and they are very, they obviously are the cynosure of all eyes, you cannot forget the MSMEs. If you need growth, if you need sustainable growth, it is important that it comes from the MSME space. There are literally thousands of these companies and they need to be supported, whether from access to credit based on their behavior, as you rightly pointed out, cash flow based financing. All of these things need to be done. If you need to have a, even better than German's Mittelsand, you need to have companies which are frankly a group, which help your one third of your GDP, so much percentage of your exports and so forth. From a market's perspective, it's important that these companies which should come to list are clean and they are not fly by night operators, because it's very easy to get funding and it's very easy to have companies which promise the moon but do not really deliver much. So from a market perspective, it's important that companies are diligent and wise. From a promoter's perspective, I would say this channel needs to be explored much more. You get your house right and you have access to, as we rightly discussed, a large set of investors, many of whom are very willing right now, in fact, to put capital for the long term. And it's only a matter of time before individual investors become institutional investors, meaning, an SME company is owned by, maybe 10,000 investors or so in terms of numbers, sir. But when a large mutual fund starts buying a stake in that company, that's when things go to the next level. A micro company becomes a larger company and so forth. This is the next stage for them to look forward to from a promoter's perspective. From an investor's perspective, more information is always better. Transparency is always better. And if they are able to see companies which are able to perform under the glare of this enhanced visibility, in enhanced disclosures, they are very happy to put in. In my understanding, there is a very nice virtuous circle to be, put in place in this case, where it's very important to see that the guardrails are in place. It's very important to see that there are no mishaps, there are no companies which go down, famous ones or whatever go down, or investors are not cheated. If that does not happen, I think there's a very long runway ahead of us where thousands of companies which can list.
The Sumpoorn initiative is very closely associated with SEBI, and SEBI being an institution that is always at the forefront of creating better credit inclusion for MSMEs. If they're not already yet doing it, do you see a greater opportunity to have them support several listing initiatives as part of their outreach, so that in a way, given their access to more and more MSMEs on a direct finance basis as well as a refinancing basis, do you see them being able to contribute to this ecosystem of bringing greater participation of MSMEs in the capital market?
My take on that would be, if awareness is improved, sir,
yes,
the rest of is basically demand supply.
Right.
It will take place.
So from an awareness perspective, it is something that would be most welcome. Awareness creation perspective.
Absolutely. In fact, you said it very well. While the numbers are good, do companies actually know of this? And I believe that's where, the grunt work frankly lies. How do you make companies, good companies, realize that this is a channel which can give them access to capital. This is a channel which can actually improve their company's performance to the next level. In India, that asymmetry of information has to be tackled with. That will be our key sort of goal. Otherwise, demand and supply things are in place, in my understanding.
Thank you so much, and wonderful conversing with you. I would have carried on much longer, but
I
for
didn't
time
realize
being,
the time went by. It went by so
pulled back.
soon.